Good morning, everyone. This is daily trading analysis with the weekly recap for this week, which has been quite a second week of selling off for the Nasdaq and also for the S&Ps. The Dow Jones Industrial Average and also small caps had a big rally after expenditure PCE came in better than expected on Friday. But the rest of the week for the Nasdaq and the big tech companies have been quite rough. The stock market, as I said, rallied at the end of a wild week after the PCE fueled the speculation that the Federal Reserve will set the stage for a rate cut in September. Every major group of the S&P 500 and also small caps rose on Friday on those bets that a Fed easing cycle will continue to fuel corporate America, with the bull market expanding beyond a small group of companies. This is not a concentration of earnings for the tech, this is a broad market rally. While the big tech has made massive gains this year, concerns about the so-called concentration risks have emerged more and more following disappointing start of the mega cap earnings season like Tesla and Google. So basically, this rotation into economically sensitive shares began in July. Following Fed-friendly data, we got CPI coming friendly, and also investors who had previously seen fewer alternatives to a smaller group of stock market winners were suddenly presented with more options. Financials, industrials, staple stocks have largely outperformed technology. Semiconductors, Nvidia, those were quite affected of those overconcentration, and small caps have risen since then, since this rotation, more than 10% on bets that they will perform better with lower borrowing costs and lower interest rates given their high debt loads. Yesterday, Friday's economic data only strengthened those bets. The Fed preferred measure of underlying US inflation, the core PCE expenditure price index, the PCE, rose at a slow pace in June while consumer spending remained strong. In July, US consumer sentiment also fell to an 8-month low. So this is the summary of the week, the summary of the situation. Let's go ahead and jump straight into the economic data. On Monday, we got the national activity quite better than the consensus 0.05 instead of the minus 0.09, but we are contracting, as you can see, from 0.23. On Tuesday, we got existing home sales getting crashed still due to the higher prices and higher borrowing cost, minus 5.4% for month over month. And on Wednesday, we got S&P Global Composite PMI 55, still expansion above 50. Services one is 56, getting higher from the 55. That was the consensus. But look that, remember that this is a flash reading for July. And finally, Thursday and Friday, the big days on data. GDP growth rate grew at 2.8%, more than the 2% expected and almost doubled from the 1.4% previous reading. 2.8% is massive because this is showing that US remains pretty strong. And finally, the PCE on Friday, the core PCE rose 0.2%. We were expecting flat, but look at this, the personal income 0.2 coming from 0.4 and expecting 0.4, so this is going lower, and personal spending also going lower from the 0.4. Overall, PCE month over month only rose 0.1% and year over year coming at 2.5% as expected. So these were quite good news for the market. That's we remained strong at the end of the week for the broader market. The Nasdaq has its own issues, its own catalysts, which we are going to cover starting with earnings. Because as I mentioned just earlier, Tesla and Alphabet set the tone for pretty low earnings expectations. Then we got Chipotle and Ford missing also estimates, American Airlines missing estimates. We got pretty decent earnings for some of them. IBM, for example, shares jump on earnings and revenue beat. Chipotle, its consumer sentiment and consumer discretionary, its earnings and revenue top estimates were beaten. Restaurant traffic rises. But as I said, false shares, same as Tesla, tumbled 13% with a massive earnings miss. Gucci, shares of Gucci owner Kering, hit with 7-year low after weak forecast and low China sales. American Airlines, another sign of lower consumer spending, weak profit forecast, oversupply, fire sales plan. They have a lot of issues. And we are seeing that rotation since weeks ago. This is a 10-day performance chart in which we can see that financials remain strong. We have utilities, we have industrials up here, and we have the three sectors that are the worst in the last 10 days: technology, consumer discretionary, and communications. If we focus on this week, we can clearly see that we are still being affected by a sell-off in the tech sector. Energy, it's trying to push higher, and utilities, healthcare, financials, industrials, these defensive sectors, and broader market for inflation bets are rising. So we are seeing a clear direction, a clear rotation into those sectors. And as you can see, this is the weekly chart on the Nasdaq. We've been selling off for 2 weeks. The first week started with a pullback, and the second week reached the 10% pullback that we are going to see right now. After the weekly analysis, we are going to see how the Nasdaq were trying to catch some bids with investors at this 10% pullback. So technically, this is just a pullback for now. We are going to watch and see if we make a lower high into a descending trend line and then continue lower. Let's see what happens. But for now, even though the sell-off were quite big and quite volatile in the tech sector, in other sectors we are seeing higher gains. We are seeing momentum to the outside in the small caps, and this is just affecting the over concentration in the tech and the semiconductor sectors. So as you can see, we on the weekly, pretty bad week, but technically we are at spot in which investors and big money it's willing to jump in. On the daily, we can start to see, let me just show you how the volume is distributing. So we have this zone in which there were previously a lot of support, and now we are trying to reach those 18,900s or even 9,000 with a lot of volume. We can see here that we are building in this zone. This is not a zone for day traders, it's a zone for investors and big funds, big banks, which they hold positions for months, even years. So this is not only for the traders cannot have this kind of volatility down here of more than 300 or 400 points, but investors are willing to add into their long-term positions at these zones. And we have to really understand that, because look at this volume. As I said, we are reaching zones of daily fair value gaps. As you can see here, there's a fair value gap which barely held, but we tried. In the 1 hour, we can also see, let me just here, that we are building pockets and big zones of volume. So even though we have this void, that we basically sold off pretty quick on the 24th, we are starting to see some kind of structure with volume down here. Key zones. Basically, the big kahuna zone right now is 20,000 up here. The point of control is up here. And that's an issue because we are way below that. So we are seeing a lot of resistance being built into the price action. But at the same time, we are seeing how big investors are placing trades, big volume trades in these specific zones. So I would just focus on, for example, on this level, this intermediate level that I have here, this volume peak around 19,350 more or less. This is a zone in which if we continue to build volume and try to enter this void again, we will most probably just go straight into the point of control. So we are building down here with a lower low down here, with a higher high here based on this pivot. And then we are trying to build a wedge in here. So we are accumulating down here, and at some point, I think we are going to see some momentum. The start of a new week and new catalysts are going to be key this week. If we start to see good earnings from tech and we start to see big data coming in and rate cuts being even more priced in right now, we have 90% of probabilities for a rate cut in September. I think we are going to see quite a lot of momentum, and this zone between this higher high on the pivot and 19,350, this zone is going to be key for the momentum start. So the NFP candle can be removed right now. This 1 hour can be removed. Let's focus on what I told you. And let's basically draw a quick outline of what I would be watching. Basically, this is buy side liquidity, and we have this volume peak here, quite interesting. So this zone is going to remain quite a lot of resistance, is going to hold quite a lot of sellers. So we might reject again, but at the same time, look at these zones. These zones are being defended with wicks. We have this zone of accumulation. So this is building another point of control. It still has ways to go until it builds a lot of volume here. But at the same time, we are seeing a structure. And a structure with volume makes me think that big investors are basically playing the long term by building in this zone more positions. And we can take advantage of that into the point of control for 20,000 push. It's going to be quite difficult because we've been also building inverted fair value gaps like this one on the daily. So we have to remain cautious, but I'm more optimistic than in here. In here, I was waiting for another leg down. That's what we got. But now we are reaching a zone in which I think we are going to see a lot of big bets for a bounce. So what we saw in the Nasdaq, it's basically the same in the Magnificen-7. Apple was feeling the pressure below the pivot on 220. Microsoft finished the week quite strong, almost with a bullish engulfing candle, but we are seeing a lot of sell-off. Pretty bad week for Microsoft also. Tesla with a big gap down on earnings miss. So let me just adjust this because this is massive. This is a massive gap down for Tesla. So long term, it tried to go higher, but failed, and we are now lower than the trend, the previous trend. And reducing this gap I mean, it's quite volatile as you can see, but the sector also for the missing estimates is putting more pressure on Tesla. Amazon in the middle of this big range. We have a zone down here, we have a zone down here. We failed. We established a new all-time highs, but we are in the middle of this range. So nothing interesting for Amazon. Consumer discretionary, feeling the pressure down. Google, quite a rough week for Google, also due to missing revenue estimates and expectations. Let me just adjust this gap down. No longer valid. I think this is the new level. And also Tesla and Alphabet were the two ones that set the tone for the week. And as you can see, Google is just falling apart. So we need to recover at least 173. Nvidia has a lot of volume being built down here, and we have a week down here on the 50% retracement. So again, this is a good spot for big investors. This is a good spot for people that is willing to just jump in long term. We got from the highs a 50% retracement, and we got buyers down here. There's volume being built here and volume being built in this gap. So I think Nvidia is going to bounce a bit and it's going to help the Nasdaq. The 20-day moving average, the purple line, is going to be key for short term. If we continue building higher, then this trend line is going to be key for a retest of all-time highs. But this is long ways to go. Meta, quite a good end of the week, but still it's building the same kind of negative structure. We have another gap here. Let me just adjust. Meta is being unbelievably volatile. So let me just adjust this because we are seeing the same kind of weakness through all the Magnificen-7, and we need to keep track of that. This big level down here, and I think the same thing happened. Long term, also the 200 moving average is down here at 429. We might see a tap and then a bounce. I think the 2 weeks of selling off in the entire Nasdaq and Magnificen-7, it's already showing you that we've been maybe overextended, and we might see some kind of structure to the upside due to long-term investors jumping in, basically. So as you can see, I got a lot of levels on the NQ. I got this pivot, then I have this other pivot here that we broke. I don't think that's with the inverted, it's already good. So this is gone. And this is what I was watching, the 10% pullback. Let me just show you. The 10% was this orange line. 10% was tapped in to the tick almost. Let me just go straight. First, remove that. Let me just show you how it got tapped on Thursday. This was the 10% tapped on Thursday. And look at this. Down and big time beef shape reversal. This was pretty interesting because Thursday was quite bullish, but I think investors and were waiting down here with a lot of volume, and the algos were just trying to catch liquidity and then running to the upside. It got rejected, but this 10% was only tapped on Thursday. Let me just remove all on Thursday because I got some issues on Thursday which I couldn't avoid. So that's why I didn't do the recap. So sorry about that. Let me just remove that. I did a trade, but just a couple $100. It is not worth mentioning. So what I was watching for Friday was basically this pivot here. On Thursday, We got from highs to lows, a bounce, a bearish bounce, which we tapped perfectly here into the overnight. And we are just in the middle of this huge, let me just show you the huge daily fair value gap, maybe into the 1 hour. This is the daily fair value gap in which we are right now. So in the 15-minute, you can see that we were, look at this open. This open was just chop and chop and chop and chop. And the only thing that held was this pivot, which we removed. And then the 15-minute fair value gap, which I had here. I didn't want to short it up here, but it was a perfect setup for another push down. And this is the most concerning candle of Friday for me. So I'm going to focus on that to really build my bias for the next week. So basically, we got a lot of wicks down here supporting. Let me just show you. We were just chopping, and we started to build a structure to the upside. That was all good, all right, but look at what happened. This candle was a big rejection, and it opened another 15-minute fair value gap inverse into here. So I'm going to watch this next week. The same with this. So we have 2 points of interest. We have this liquidity, and then we have this liquidity up here. And once I have these zones, I think the setup is quite clear. Let me just put the 10% quite clear down here, because it's going to be key for next week. This is a 10% zone. We tap it here. We are wedging to the upside, and we have an inverse here. The big setup for me is going to be continue building structure, jump down, get these guys, and then quickly recover and push to the upside. This is the bullish fair value gap, the bullish setup that I need in order to get more confident with the longs for next week. I think at some point this is going to happen. I don't want to see again, this is the first setup, I don't want to see a rejection, then with this trend line obviously taking all this liquidity to the downside and then retest the 10%. If we retest the 10%, it's not the same time, it's not the same sentiment as tapping it one time and quickly recovering. If we retest, I'm not going to buy this 10% again, because I think we are going to see more lower pricing. Where? I don't know. I'm not going to put myself into that because those are big pockets and I don't know what kind of positions they are going to take. What I'm going to say is that if we see this setup, I'm not interested. I will not trade until we see, let me just put the trend line here. So I think this is the setup. So let me just extend the liquidity and the zones, which are berries that I would like to see them being destroyed. I want the Nasdaq not to test this 10% again, and I want to maybe invalidate this trend line and quickly recover for a manipulation move into a big squeeze for all this liquidity. This is the big setup that I'm watching, with manipulation moves and with liquidity being taken to the upside. Targets. That's when we need to see the inverse fair value gap, which is building here on the daily. And that's why I have the volume up here. Because if we start to see this structure to the upside, let me just remove that, we have a big void down up here. This is a big void. And when we have a big void of volume like here, like this, the time that we spend in this zone is just instant, either to the downside or to the upside. We quickly went through this into a big sell-off day, the worst day since 2022 for the Nasdaq. And now we are going to enter in the same way. We have a gap up here into the Nasdaq. We have the point of control of the entire range down there. So it's going to be quite difficult to pinpoint where is going to be the target. But what is true is that this pivot here is going to matter quite a lot. And also the 50% of the daily inverse fair value gap. So the target would be 19,650 for the long. And if we go to the 50-minute, for example, we can see setups, or the 30-minute, we can see setups like this one, for example. If we see the manipulation move to the downside like this, and then we quickly recover, if we take these pivots and we see the break of this structure to the upside, we can clearly see that if we take that with a retest, if we see the manipulation move and we take the first point, we have already a 2.29 risk-reward ratio for long, and that would be a massive move for this structure up here into the 50% of the daily inverse fair value gap with 400 points. These 400 points are my weekly target, and I'm not going to take this, but as you can see, there's a lot of potential if we manipulate to the downside and we quickly recover and we push. There will be a lot of people interested in playing this manipulation move. So the risk-reward ratio is quite good. And again, I don't want to see the 10% being retested again. This is the setup for the next week for my bias, and this is what I would like to play as much as possible for the entire week. I have 430 points of potential range that I would like to play. More than that, that would be also. Less than that, that would be also good. But we need to play with a manipulation move. We need to have these big money, big funds, big banks into our side to push this big resistance. And finally, I would like to just reinforce the fact that the RSP, the overall weighted market, it's really trying to bounce again. It was quite a strong push into the upside. Then we got a hard pullback, but now we are seeing a lot of momentum again. So the case is quite clear. Small caps are being rotated into. We have S&P suffering. We have the Qs, the Nasdaq suffering. But the Dow Jones, the industrials, the small caps, the broader market, it's quite strong. So this is only affecting the Nasdaq. Unfortunately, this is what I trade. But as you can see, we can have some kind of big move for this week. We are building a structure. If we go to the continuation, to the continuous chart, we can see even more structure. And this is going to be awesome. I think this week is going to be, after 2 weeks of big sell-off, one of those, the biggest red week for the Nasdaq since years ago. I think investors found the 10% pullback, and that is going to be key for their positions. And we need to take advantage of that. That's the edge that we have, taking advantage of those big money players to really see the structure that we need and then play our setups. That's the way you trade these situations. And that's the edge that we can have for this week. That's going to be my setup. I explained you why And I hope this video was really useful, because that's what we do in this channel. In this channel, we do these weekly recaps every Saturday, and also from Monday through Friday, we do daily videos for market forecast, market updates, and market recaps. I hope this video was useful for you. If it was, please give it a like, subscribe to the channel, because I do this not only for you, but also for me. I'm doing my own analysis for you also, for you to learn my way of trading these markets based on my experience of almost 5 years trading this. And it's not a lot of experience, but I've seen a lot of markets. And I have my strategy, I've shared that with you, and I hope you have also that strategy. I'm only sharing my analysis for you to also do your job, do your work, do your own analysis, and trade the way you want. But these videos are for you to understand others' opinions on other markets, to have the edge needed for you to trade these markets. And that's all. Remember that patience, discipline, risk management are key for your success. Stay safe, everyone. Have a nice weekend, and see you on Monday.